What is going on YouTube? It's Sankey. We are back with another one. Now in this drop, I'm going to cover off a couple of plays with you guys. But before I get this show on the road, if you'd like to help out the channel by hitting that like button, and if you're new, join the movement by hitting that subscribe. So that wraps up for another day in these markets. Now the theme that's been eclipsing the entire global market today is talks of inflation. So I just want to run that through with you guys, especially for my new investors. You guys are probably getting information overload right now. So I just want you guys to hear it from someone who's had a decade of experience in the game. Now, first, let's take a step back. Inflation is just that rise of goods and services over time. So the reason why it impacts the stock market is because what it does is it reduces your buying power. Because if you buy into a stock that goes up 3%, but inflation also goes up 3%, the two effectively cancel out. Also, we know Fed makes changes when there's inflation, such as reduced interest rates, and that can lead to economic slowdown. But we know we're moving into economic reopening, so we should have no problem hitting good economic growth numbers over the next couple of quarters. But now what the media is not telling you guys is that inflation, what it does is it should actually increase the cash flow of these businesses, because effectively they just increase their cost of goods and services. So I just want you guys to know that. So net, the two should cancel out. But when you read the media, there's all panic, all fear. That's why you're seeing these markets come down temporarily. Now, you guys must know this kind of inflationary linkage to the stock market is not new. I'm just going to pull up an article from 2018, the very same situation where we saw global stocks at an all-time high, but there are inflationary fears that caused a pullback in the market. So what you guys got to know is with the stock market, history tends to repeat itself. And it didn't take long before we recovered from this, and it won't take long before we recover from what's going on right now. So that's why the strategy remains the same. I'm still buying into these plays because there will be a turnaround and those returns will be made. Now the stock market's a funny thing, because if you just do the reverse of what the crowd is doing, you're likely to hit success. So when you see these prices running up, there's all the euphoria in the market. If you bank those returns at that point, you'll be winning. Now on the flip side, when the market's coming down and people are panicking, selling, hanging up their boots, if you're buying in on the cheap, when the market does rebound, you will be winning. Now, we know over the last couple of months, these professional money managers, hedge funds have been tanking the market, smoking the plays, but best know that they are plotting, getting in on the cheap and making money on the way up. You guys know they make money on the way down and on the way up in enormous quantities, and they got a lot of capital to spend. So I'm making sure I'm positioned ready for the climb in these markets. That being said, I've got a couple of plays on a run through with you guys, give you some updates, let you guys know how we can navigate these plays, hit success with them. So as always, I've got a jam-packed on for you, so do make sure you stick this one all the way through for me. You guys know what time it is. Let's get ready for the first one. So I'm going to touch on this one before we head over to our main event, and that's the play to load up on. But first up, we got Roblox, ticker symbol RBLX. This was part of our easy money plays that I gave you guys last week. I said entry was in the low 60s. This play's been on a phenomenal run today. So those of you who got into this one, you're doing well. Now I'm going to give you the heads up on this one, my 2 cents on how I'd move with this going forward. What you guys got to know about this play is the valuation here is sky high. When it comes to the stock market, guys, the fundamentals are important. We know, like times like now, where there's that detachment between the fundamentals, but over time there is that convergence. So I just want to give you guys the heads up, because price to sales here comes in at 40 times, and that is eye-watering to say the least. So I can guarantee you, as we speak, you got the short sellers working in their basement right now, plotting on how they can take this one down and secure their bag. But going forward, how I would play this one is in the short term. I'm hesitant to put this in my long-term portfolio, but in the short term, you can make wins. As I say, when I was talking to you guys in that last video, I said if you catch them low, you can ride them up to the 70s, the 80s, cash out. If they come back down, you could just repeat over time. As I say, you guys should be mindful with these types of plays that have that super high valuation, but don't let that detract you from making short-term wins in this play. Those of you who are looking to make entry, as always, guys, you want to have a pullback in that stock. So if this one pulls right back down to the mid 60s, that's when you guys consider making entry on the play. In the meantime, there's plenty other plays that you can pick up in the markets, like this one we're moving over to next. So we've got Revolve, ticker symbol RVLV. This is an online retailer focused on the millennials and Generation Z that I brought to your attention before. Now they came out with earnings just the other day. It was a crush from both the top line right down to the bottom line. EPS came in strong, revenue numbers came in strong. So check this out. Off the back of the earnings, we saw stock price increase from that $50 mark right up almost to that $60 mark. It's an explosion on the day. The very next day, just to give up all of those gains. Now, that's not due to the business, that's just due to the market, guys. As I told you, the market's got a hold on these plays, and it's not like letting any of these plays break out. Doesn't matter how good their results are, it's just not going to let them make their breakthrough. But that's just an opportunity for us to come in and just know that, grab these plays on the cheap before the market releases them and they make their climb. This is a play that can easily pass into that 60, mid 60 range, and from where they're currently standing, that's very good returns to be made. Now, this is going to be a play that thrives in a reopened economy, just like a higher cut, because as there's more socials, more events, demand for their goods is going to increase. This play already navigated the last couple of months in a closed economy well, beating estimates, so you can only imagine when they're firing on all cylinders when we have a reopened economy. So I'm expecting this play for the rest of the year to outperform. So this is a play I'm expecting to deliver strong numbers quarter after quarter, and I'm expecting that to feed into that stock price over the next couple of quarters. So this is a play I just couldn't resist bringing to your attention. Now, what I like to do is enter these plays after earnings once they pass that earnings test, as I like to call it. So once they post up good numbers and the markets have time to react, whether that's positively or negatively, then I can make my entry. Now, this play should help you guys add that quality and depth to your portfolios moving forward, because this isn't one of those overblown plays when it comes to their valuation. Valuations come in check. They're also a profitable play and have been so for the last 3 years, and revenues are growing. Not to mention, we're moving into economic reopening. As I said, that should give them the catalyst they need to move up a gear. Now, I'm going to run through an additional play with you guys. That's Palantir, ticker symbol PLTR. Now, this play post up solid earnings today, and it's good to see the market rewarding some of these plays off the back of good earnings today. Now, what you guys need to know, revenues, they blasted through estimates, no problem. But what I was impressed by is that they posted up their first quarter profits. Albeit small, this play still deserves credit for that, because for a tech play in its first year of reporting, this is an impressive thing to do. Not only that, guidance for the next quarter is strong, and you guys know I like to see that solid guidance for the next quarter. It shows there's momentum in the business. So for those of you holding this play, just let that be a sign of good things to come for this one. So that's why you've seen that strong performance on the day. Now, what I'm looking for this one to do is climb back up to that support around that $21 mark and get back on track over the next couple of trading sessions. You guys know the market is volatile right now, so you might be able to catch a further dip in this one if the market brings this one down. But just know this is a strong play, and they've just reconfirmed that given their earnings today. This is one that still have that short-term price target on of $30 at the back end of this year. And going into 2022, this one should continue its climb, given the contract wins and the momentum that this business is carrying forward with it. So I just wanted to highlight this one for you guys. Just another play in the portfolio doing good things. So if you've been rocking with the channel, you know what time it is. Now, this question comes from the Gert. Says, just out of curiosity, how many different shares are you holding? I know I have too many. I want to consolidate them into high conviction plays. So I want to share this one with you guys, because I know right now a lot of you, you're reviewing your portfolios to ensure you're set up for future success. So I'll give you an insight into mine, and you can use it as a framework. So right now I'm holding about 30 plays, and the key here is that's a manageable amount for me to stay on top of, because what you got to remember is all of these plays are going on their own journeys, and I like to be in the know so I can act accordingly. So for example, that could be increasing or decreasing the length of time I plan to be in the play, or increasing my position in the play off the back of the direction the company's going in. I like to keep the portfolio well diversified. I've got the growth plays in there, got value plays too, also got plays that will win in an inflation environment. So that's plays like SLM, Wells Fargo that you guys know about, and of course the recovery plays too. So I just want to give you guys a high level overview of how I structure the portfolios, so you guys can continue building quality portfolios with your high conviction plays. Remember, these are plays where the valuation is in check, revenue growth is there, industry growth is also there too. Alright guys, so that wraps up for this one. If you'd like to help out the channel, do hit the like button. Also join the movement if you're new by hitting that subscribe. Now, as you progress through the week, you guys know I'm turning up the heat to ensure you guys continue hitting success with me in these markets. So I'll catch you on the next one.